Hi everyone, and welcome to Trade Talk Radio, the original show, the market analysis show from Actions to Wealth for today, Sunday the 22nd of March 2020. Can one of you guys confirm for me that you can hear me okay? I'm on a different setup today. I'm in self-isolation.
I can hear you.
Oh, g'day Jeff, how you doing, mate? Nice to have you along.
G'day, mate. Yeah, nice to be here. I got a sore throat, not real thrilled about that, but yeah, I'm here for now.
Mate, you guys were amongst the first, weren't you? Didn't you guys cut the rest of the world off recently?
Not early enough, mate. I'm a pretty angry chap right now, due mainly to the fact that some idiot or group of idiots managed to unload 2,700 people off a ship which berthed in Sydney on Thursday with people who were symptomatic of coronavirus.
Mate, they let them off the ship in Wellington a few days before that. So, the truth is that right now, I've got to say, mate, I don't know about you, but every time I open up any form of social media, I have messages from friends sharing audio files.
Yes.
Given to them by close friends, warning them of something or other. I don't listen to the audio files because I don't actually believe these people have got contacts and know what's going on with coronavirus any more than we do. But boy, oh boy, it's the topic of the day, isn't it? There's a lot going on.
Yeah, well, if there's an elephant in the room, it's pretty large, I'm afraid.
Yep. Let's get around the guys. Let's start off today. I'm just trying to. There we go. Look, we're going to go around the team today. With us today, we've got Julian, professional trader from New Zealand. We've got Ash from Brighton Beach. We've got Jeff with us who'll do the technical market analysis for us later on. And Ainsley, who'll join us in about 15 minutes, I think, who'll do oil and gold for us. It has been another big week. Lots going on. We tried pretty hard to get a long way in oil on Friday. Got a start, but couldn't really get it as far as we wanted to get it. Interesting market. We'll go to Julian first and get a rundown. Julian, how are you seeing this market?
Hey, Paul. Hopefully you can hear me, and good evening, everybody. Okay, Paul, I think I want to start from, let's take a bigger picture view of everything in terms of my overall themes. I think that's probably the best way of starting tonight in terms of what I'm thinking about. So for me, I view two things as going to happen in the course of the next few weeks. Pretty much a slam dunk. Number one, I believe the US dollar will reverse at some point in time. I'm just not sure when that will be. At some point, the Fed will capitulate and provide sufficient foreign exchange swaps to put enough dollars out there to make sure that the dollar at least stabilizes, if not reverses, which I think is a tremendous opportunity for us in the currency markets. The second thing is, as a consequence of that, plus all the government actions we've seen over the course of the last 3 weeks, most notably in Australasia over the weekend, I think there's a very much a recognition amongst the governments that nobody cares about inflation. They care about keeping people in jobs. They care about making sure that the economy is still there at the back end of this, whatever this is going to end up being. And as a result of that, they're now subsidizing people to the point of making direct payments. We talked about this as being a political subsidy, I think some time ago, as if you like, it's the ultimate in QE. You don't involve the banks, you just give the money directly to the people. And that is a new way of thinking that's been in America very clearly, given the steps that have been taken. That consensus view has been formed around a lot of financial and government circles for the last 18 months. That's now being enacted in anything other than I can just only describe it as being an amazingly massive, enormous injection of money into the system. Now, right now, we need that. Timing its withdrawal is going to be really hard, but I would guess the governments will be sluggish to withdraw. So the consequence of this is I've now moved into full inflation mode. I'm not sure how during the course of the virus journey we're going to be, whether deflationary or inflation. I still haven't seen any sign of anybody in my neck of the woods dropping prices. In fact, if anything, there's a lot of profiteering going on for in-demand products. The other products just simply aren't selling. Doesn't matter what price you make them, they're just not going out the door. So I don't think there's much deflation around there. I think there's a demand drop. There's not much deflation. There's probably a little bit of inflation. I think inflation figures will probably surprise us to the upside. However, in the medium term, I can't see straight for the inflationary consequences of this. I think this is a secular change, and I think that the consequences of that are going to be enormous. I think you've got to own gold, you've got to own inflation-based assets. so gold stocks, and also currencies that look like they're going to benefit from that inflationary environment as well too. So think about levered currencies as well too. So I'm a significant fan of the Aussie and of the commodity based, the Comdol currencies. They'll do very well eventually.
Sorry, Julian, can I jump in for a second?
Yeah, go.
You see that reverse in the US dollars. Now, we'll have people on YouTube, our traders on Zoom, they'll understand what that means. But for traders on YouTube, right now, the US dollar is going in which direction?
Well, the US dollar is rising, Paul, as you can see from pretty much any currency chart against. Pick any of the top 5, euro, British pounds.
Look, I'll
Canadian,
do dollar CAD, which has got, for people who are new, this is a weekly chart, and the dollar CAD chart shows the US dollar, what it's doing. So this is the US dollar going up, put on a daily chart, and you can see the US dollar has been very strong.
Very strong, Paul. And the reason why it's been very strong is there's a global shortage of dollars. I won't get into too many details about that. Just trust me on this one. It needs to be mitigated by the US central bank, which up to this point in time, it has pretty much point blank refused to do. I think there may be a sea change coming in that. Once they realize that a super strong US dollar is probably not the best outcome for either their economy or for the world. So normally a strong dollar is usually quite negative for the world economies. We'll see how that goes. But, you know, my view of this is that inflation is coming now and is coming hard. It's just a question of when and how. And subsequent to that, there will be a move, you know, in order to mitigate this dollar rally, you need to pump a lot of money into the system. Now, that'll either be done by the Fed or by the government. Right now, a lot of people outside of America have chosen to do it via the governments in a spectacular way. And I think that's going to come in a spectacular way in the States as well, too. And at some point in time, that'll therefore put a brake on the drop in financial assets, regardless of what's happening to the disease and its spread. So this is like what you're already doing is you're saying, okay, we get this. We understand what's happening. All the economies are all the governments are responding to the economic problems which are in front of them, and they're trying to get ahead of them and to try and mitigate as best they can. And that should calm the financial markets down. Because at the end of the day, you know, when you buy a stock, you know, you buy Tesla, you're not buying Tesla for the returns you're going to get on Thursday. You're buying Tesla because you believe it's going to be a great stock over the next 15 to 20 years. And so the value of that particularly interesting stock in mind has come down 2/3. And they say, well, therefore it's looking reasonable value now against where it was, you know, 3 months ago. And as a result of that, I'm happy to own that for a long period of time. And I'm just going to put it in my drawer and walk away. I've been inundated with calls from friends of mine asking me about which stocks they should buy. Obviously, I can't tell them to buy any stocks because I'm not their financial advisor. But I think it makes sense that there are some people beginning who haven't, you know, really bothered to play in this space, you know, starting to think about it now because yields have got to the point where they find them attractive. And also, don't forget, stocks are a very good inflation hedge as well too. So all of those things in my mind, that's my overall theme. When we get back into trying to find out what's going on, look, the Aussie dollar has just broken to new lows. And, you know, Jeff has been right with this all the way through. I don't know how much more legs this thing has on the way down. We know that tried to put a bottom in place last week. I'm watching for a higher low in the Aussie dollar of some description across maybe a 240-minute time frame. Let's call it that as an opportunity. In dollar CAD, I'm looking for the same. I'm also looking for that in the Kiwi as well. I feel there's potential for a short-term rally in some of those currencies, notwithstanding my overall theme. We'll probably end up going lower eventually, but we're talking about short-term rallies here, which will then crush, by the way, will then crush volatility as well too. So I think there's some really good opportunities out there. I can't make head nor tails of dollar yen. Maybe somebody has a much better steer on it than me. And the euro is still a bit of a mystery to me. So some of those other crosses I think are really interesting. Euro Swiss I think is done. I think that's going to stop going down. And I also quite fancy, as I have been saying for some time, I think the level of euro sterling, so EUR GBP at this point in time is absolutely insane. And I've no idea why the market's at these levels. People must have such a poor view of the UK right now. If you look at that on a monthly or weekly chart, Paul, these are historic highs, right? It's unbelievable. I have no idea why it's sitting at those valuation levels. That doesn't make any sense to me whatsoever. And so there's a real risk here as we create that sort of that megaphone pattern, if you like, on that monthly chart, that this is going to lead to a very strong reversal and we're going to go down incredibly hard back into the 60s and it'll happen really fast. I mean, like, unbelievably quick. as people recognise that once the UK gets going and turns its real full attention to this problem, it's got much more flexibility than 26 other European countries trying to argue amongst themselves.
Mate, I've got a couple of questions for you, I think. So you're talking about an inflation play. So you like gold, you like Australia, New Zealand, and CAD, the commodity dollars, commodity currencies.
Yep.
Individual stocks. Air New Zealand stands out for me. You buy Air New Zealand at a song in the couple next 2 or 3 weeks, I'd have thought, and it's one of those. You know, you're looking for value, and in New Zealand, the New Zealand government will not let it go to the wall. No matter what goes on, they'll keep Air New Zealand afloat. I think it makes it a pretty interesting buy at some point. Ash will talk more about stocks, but what we're looking for here is that we believe while the economies in the world are slowing, that governments are pushing so much money in, what they'll do is they'll create inflation, and the price of essentials are going to go up, and that any inflation play is a good play, and the short volatility play is a little bit harder for spot traders, right? They've got to get into futures markets really to get to that, right?
Yeah, very much so. Look, I don't recommend anybody who's starting out on their trading journey to go anywhere near volatility. What you're trying to deal with is the big ratchet up. What I mean by volatility is, say, the average true range of the last 5 days. If you create that indicator, or just the range on the daily charts the last 5 days, look at what that's done over the course of the last 6 months. We've gone from the lowest volatility in foreign exchange that I've ever known, down in the 3% and 4%, up to, I don't know what the current level of volume in forex is now. I'd imagine it's in the low 20s, probably, certainly the high teens, which has almost been the historic high for volatility for foreign exchange markets for the last 20 years. You've gone literally in a very short space of time a complete about face in terms of where the markets are sitting, and what that volatility is really doing, and what it's really saying right now is it's saying we want to differentiate between different currencies because we think the responses by different governments to this have been either good or bad, and we're going to sort the wheat from the chaff because everybody has the same interest rates. There's no reason why the currency should have moved at all. So it's moving on the classic fear and greed and who's doing a really good job with their fiscal policy. And that's the reason why I really like the Comdol currencies, so Canadian, Aussie, Kiwi, for the course of the next week or so, just because they're responding incredibly aggressively to what's going on. The Aussie and the Kiwi, the measures they put in place, certainly the Australians, I'm sure the New Zealanders will follow this week, have been nothing short of a sledgehammer to the effects of the virus. They are going for it, and the provision of money to everybody is nothing short of extraordinary. I think the UK are heading down that road as well too, with their proposals, and I think these are all great things, right? That's exactly what the governments need to do. And so, why would you trash their currencies? They're doing the right thing. They're dropping rates to zero, and they're providing a massive fiscal stimulus. Don't give these guys such a hard time by selling it off, right? So what's the point? So at some point in time, everybody will recognise the value of that and say the recovery as we come out of that is going to be as equally fast. And so expect V-shaped bottoms. We're not going to have the luxury of sitting here on a daily chart waiting for this thing to slowly unwind itself and give you a nice high or low for you to buy on the daily or the weekly chart. This is going to be fast and furious on shorter time frames.
Mate, there's the average true range on euro dollar for the last period of time, and you can see the average true range is just piled straight up. And if we go through some of the other currencies involved here, you were talking about the Aussie, similar story on ATR, the Kiwi, similar story on ATR. So as the ranges go up, the markets are getting more volatile. One of the things we've talked about in the last few weeks, Julian, is we've told our people over and over again that it's time for cut your risks back, and lengthen your stop losses out a little bit, and be patient and understand in a market like this that you're likely to go loser, 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 big winner. It's a different market we're trading in. You have to accept that you're going to get chopped out on price action quite a lot in a market like this. But when you get it right, the rewards should be far higher in a market that has this kind of volatility and, as I say, this average true range, which is just getting bigger and bigger.
Yeah, look, and my comments on this, Paul, are the same as I've had for a number of weeks, and they've always been the same, is you have a process for the reason why you take a trade. Do not deviate this time. Right now, if you could use a war analogy, you're right in the trench and you're firing your gun. What you want to do is to fire your gun as quickly as possible in the safest possible way, right? And that's what you've been trained for. You don't suddenly stand up and fire your gun. You don't suddenly try and help your mate and help him fire his gun. You got to fire your gun as fast as possible. Okay, so this is about sticking to your process. All the things that you've been waiting for and learning for in trading foreign exchange, right now, this is when they come out. Okay, do not deviate. Do not think, oh, it looks like, and therefore I'm going to do something odd, because that's when you tend to get unsuccessful trades, and also that affects your, more important than your physical capital, which may or may not be affected by this. It's entirely possible that you could have winning trades off a bad process right now with the way the markets are behaving, but it affects your mental capital, right? It eats away at you over and over and over. And so that's why sticking to the process right now is the most important part of keeping your mental capital together. Regardless of whatever's happening out there, you've got to keep your head and make sure that if you aren't, don't use stops that don't make any sense. Use the market to place your stops. Some days you're looking and you go, oh my God, that stop's got to be 120 pips. Okay, so it's 120 pips. Well, how much risk do I therefore want to put on that? Clearly, it's going to be a lot smaller than if I was risking 20 pips. Right? But this is what you've got to do. This is what happens in volatility expansions. But you've got to stick to your process.
And just to go through that volatility expansion again, on the 27th of February, the average daily range, how much the New Zealand dollar moved in a day, was about 48 pips. And today, it's about 180.
Yeah. So if you're just using that as a base for your thinking, then your stop losses need to be about 5 times the size.
Yeah.
So your risk by definition is going to be a lot lower.
Cheers.
Well, the risk will be the same, but the amount of size that you're putting out there will be a lot lower. I apologize. I don't want to sound confusing.
Thank you very much. Anything else from you, Julian?
No, that's me, Paul.
Mate, I hope that the week at work's a little calmer for you this week, mate. Have a really good week, and we'll talk to you next Sunday. Thanks for joining us today. Always good to have professional traders in the midst and sharing their views. Do appreciate it immensely. Rightio Ash, we're coming to you, mate. We're going to talk FTSE, and I think we're going to talk inside the FTSE a few more UK shares as far as you go, mate. What have you got for us?
Yeah, I mean, the FTSE is in the same situation as just about all other global markets. If someone wants to pass me the screen, I can show you a few charts of the FTSE and what's going on. Just on the, let's make sure it's the right one. So this is the price action with the FTSE attempting to get up. I mean, it was interesting last week because for a lot of the week, this weekly bar was starting to look like it was creating a hammer. But as soon as we kind of hit Friday, which was a bit of a tricky day, to be fair, because we had triple witching with options and futures and can't remember the other thing, but we had expiry dates going on Friday, which made it a bit of a tricky market. What's that, mate?
So triple witching means that we've got the options expiring, we've got the futures due. So there's a lot of stuff going on where market manipulation can be attempted by players.
Yes, which makes it a little bit tricky on the mind actually to trade, because you know that there's that other elephant in the room in the background when you're making decisions on value in a way, because you're not really sure where people's positions are actually going to be at their safest point. So it did look, as I say, all week that this market might well just start to give us a hint that we might have at least a week coming up into the end of the month that might see a rally. But it was swept aside towards the last few hours of the day. And when we look at the S&P on the weekly chart, right the way on its lows, and if we look at this monthly chart, it looks to me like the S&P might have another area to come down to before it's kind of really hit a genuine shelf down there. So I think the American markets have got further to fall. And with the America, maybe not too much further, but it does look like it's got another leg to go, small leg to go to the downside. And with the American markets doing that, then the FTSE will very much likely go with it, or at very, very best, go no higher. So I'm still looking for shorting opportunities in the financials, actually. I really like the food supply chain. So I like supermarkets for upside. I like farms for upside. And steel as well, and iron ore. Where last week I was short on steel, I've actually flipped my position because I was just reading an article about the fact that steel looks to be a bit of a safe haven play right now. And you know, when we get things going again, and when building work starts again, I think some of those steel stocks would be a really good play. We were talking before about inflation, and I think inflation's coming, and it's coming hard. If it hasn't already arrived, you know, I've already seen some bits and pieces, some price filtering through in the UK, which is is suggesting that inflation is on its way. And because of that, I quite like the prospect of trying to buy stocks that have precious metals and some iron ore as part of their mining. So I'm looking at things like that right now, and you know, I'd be a lot more bullish on things like mining stocks and obviously the food supply stocks than anything else right now. You know, and I still think that there's some downside in some other stocks. So, you know, if everybody understands hedging, then I'll probably hedge one off against with the other. But if the stock market does start to pick up, there's every chance that there's going to be add points on those stocks if they do manage to actually hold themselves up anyway. You know, I have seen supermarket stocks doing fairly well. You know, this a stock I was talking about a few weeks ago, Ocado, actually has got a buy signal now. It's one of the only ones, but it's actually got a buy signal. So that looks like a fairly decent prospect to me.
Ash, is Ocado food delivery?
Yes, it is. It is food delivery, which makes it actually a bit of an outperformer in the supermarket chains, where a lot of the other supermarket chains obviously still have to rely on people going to the store, which they are doing. The things like Ocado is pretty much pure delivery, so they are benefiting from the fact that they are, you know, they've got contracts that will deliver to people's doors and have no contact, no physical contact with those people. It's also done a deal towards the end of the year with a food retail outlet called M&S, Marks and Spencer, which is probably the best. You know, so it's a really, really good deal that they've done. They did come away from Waitrose, which is, you know, probably Marks and Spencer rival, but the fact that they've done that deal and that's coming towards the end of the year, I think that they would probably have been on many people's radar anyway. So the fact that their stock has come down with the rest of the market makes them a pretty good value play, in my opinion.
Nice, mate. Nice. Anything
On
else
the pound?
Yep, on the pound.
Actually, yeah, the pound. You know, Jules was just talking about the pound, and it's interesting. I was talking to a friend about the euro pound, and it's the same thing. You know, because I've got a bit of a dog in the fight with the pound, the euro pound, because I've got a property in Spain, that I've got a small mortgage on. So when the interest rate, when the currency rate moves, I start to sweat a bit when it's going in this particular direction. But I was looking at the move, and I said to my friend, you know, the way that the market has been, this thing could be right the way down, you know, beyond these lows before the end of the month, you know, because of the price action. You know, you don't really travel with this kind of speed and trajectory when there's still an unwinding of news and data to come. So I get the move in the pound. You know, I get the fact that people have got a bit of a lack of confidence with the way the UK government has handled things. I get the fact that the currency has been devalued because of the interest rate cuts. But Europe has still got the worst case in Italy for the coronavirus, and there is still plenty of work for those guys to do to make sure that the market stays where it is. Now, I don't know whether they can lower interest rates because they're already negative, but there's going to be you know, fiscal stimulus kind of packages coming into play, and possibly, you know, a QE package coming into play with the euro. So I think the euro is also a short from this area, but I personally wouldn't want to play it, and the reason I wouldn't want to play it is that if we consider that all of these bars and you know, the average true range and the volatility, yes, we can use, but we're really only looking at the volatility in this one being so extreme in the final 3 days of the week, which means that, you know, volatility's picked up across the board, but you consider the last 3 days of the week last week in comparison to just about every other daily bar right the way back in 2019, and it is an ugly play. And I think personally this one, I would see this coming lower. I can't say when, but I think that it's going to come down just as fast as it's gone up, if not quicker. But I wouldn't want to play it just because of those, particularly because of those 3 bars. Those 3 bars scare the bejesus out of me, so I won't be touching it personally. And also gold. Oh, sorry, we talked about gold stocks, but also gold. I think if there's a way to play gold that wasn't against the US dollar, now that would be the only thing for me. I think that the inflationary story probably promotes gold. It probably does actually drive gold higher. But I don't think I'd want it against the dollar. I think, it wouldn't be the worst play in the world, but I think there's probably better currencies to play gold against than the US dollar. Namely, really, the euro potentially or the pound.
Euro gold?
I think so. Yeah, I think euro gold would be a pretty good play. The way that the euro's been moving, it has been kind of aggressively bought up. Obviously not against the dollar, but you look at it against the Aussie, you look at it against the pound, and the euro's had an incredible run to the upside, and I don't really see the logic with that. So I think because of where the euro sits right now, in probably, in my opinion, in lofty areas in comparison to some of the other some of the other currencies. And because of the inflationary play, I think gold is a good trade. I think gold is a decent thing to start looking for. If there was a trade in euro gold short, then I think that would probably be maybe the play. I think that would be a really useful play if people could find that particular prop.
If you're on our IFS platform, we don't have euro gold, but if you're on the Fusion platform and you've got your own account, I think they've taken it. I'm not sure if they've left it on the ATW educational accounts or not, but if you're one of the Malaysian students and you've got the Fusion Markets account, you've got euro gold as an option in there. Richard, we're not taking any verbal questions, so if you've got any questions, just type them in under chat or type them in under Q&A, and we'll get them out as quick as we can if possible. But we're not opening up the verbal on this. We're live to YouTube, and we don't want to screen live questions out at this point. Okay, Ash, anything else from you?
No, I think that's pretty much me, mate. I think that's pretty much me.
Rightio. Well, we're going to go to Jeff and talk about charts. We're going to go and get into some technical analysis. Jeff, how are you looking? You grabbing the screen, Jeff, or you want me to give you a hand? Jeff, you with us? Jeff, if you're talking, you are muted. Jeff, either I'm having internet issues or you are not with us.
No, it's okay, mate. The control panel disappeared and I couldn't get it back, which is one of the foibles that Zoom throws at us every now and then. But here I am.
Mate. Yeah.
Okay. Interesting market. What an understatement. I'm going to start with the euro, and the reason I'm going to start with the euro is to exactly the point that in particular Julian was talking about before. I think I told you guys last week that I was so peeved that I missed the journey back, having got all the way up with the euro, and as soon as we got back underneath here, I wanted to get back in the euro, but short. And lo and behold, it did set up on a daily chart. And we took this on Tuesday morning, I think. Yeah, Tuesday morning in the TTR show for the slingshot. But I don't think I've ever traded a euro candle of 200 pips. This wasn't 200 pips, but it was all but. And by the time I'd added my risk, which was over here, I thought I'd have to get clear of that swing there. It was 200 pips. I don't think I've ever done that before in my life. And the reason is because of exactly what we were just talking about. The ATR is so stretched at the moment. And I remember going back, I don't know how many years, Paul, but it's quite some time now. And we spoke about the strategy that I trade. And we decided that ATRs were very much a case in point of the parameters that we use in that strategy, which are limited by the candle size. And we decided we should reduce that candle size because the ATR had crept so low that we couldn't get a trade in the market if we didn't do that.
I remember that. Yep, that's a while back.
That's a while back. But this is now flipped on its head, and we have to do exactly the same thing in reverse, because the ATRs have now gone out to such a degree that the candles that I'm now trading are way outside what I would have traded 12 months, 2 years ago. So I think this is a beautiful case in point, and the reward on this so far is only about 1.5 to 1.
Yep.
But it's there, you know, if it's there, it's there. And the obvious out point is pretty much where we are now. So I've closed the position at that point, and now I'll probably reverse my bias and look for anything that goes long. And I think that's going to be it was a theme last week. It's going to be exactly the same theme this week. Just wait and trade those major levels. If the major levels give you an indication that we can go in an opposite direction and it sets up, take it. So that's nothing's really changed. That's exactly the same scenario that we looked at last week. And that's pretty much the only one that's set up was the euro. I'm pleased to say it's set up. There's a couple of others that I'm really looking at strongly. Kiwi is one of
Kiwi.
them. Yeah, the great and honourable Kiwi. That's true. Is also setting up. That's the monthly chart once again that I'm looking at, and that's a very clear descending triangle to me, which you would tend to think is going to break to the low side, and I'm up for that. I don't have a problem with it. What I also know is that once this breaks, it will tend to go a fair distance. You can probably measure that if you want to. There are measured moves that you could calculate wherever that's going to go. I'm not a fan right now of trading it short, of course. I'd rather trade it short from the resistance level than I would from a support level. But I do see a very, very strong support level here. It did dip, and I think Julian called this last week. He said this will dip below parity for the briefest amount of time and come back off it. Well, I'm not sure how brief that amount of time was. It was probably in minutes rather than hours, but it did exactly that. I tried to find a way in myself and failed to a certain degree, I must say, because I thought once we got back in here and retested it would be a good opportunity. And this happened on Friday, actually. And I failed with that. I won't give up, however. I'll wait until it gives me another signal. I'm on the monthly chart. Let's go to something a little bit more meaningful from a trading perspective. So I tried to trade long here in this vicinity, and it didn't work out. But I am still waiting for the significant, and this was the significant higher low for me. But we're really not back inside that range that I like to come back into. So I'll wait for that to happen again, maybe a break and retest of this trend line that I've got sitting here, giving me a higher low, and I think that might be the time to go. So I'm continuing to watch Aussie Kiwi. What am I doing? Why am I saying that? Kiwi. I must be having a dream about getting unlocked into something. I don't know. So anyway, that's the bias that I currently hold, but I do absolutely have a strong respect for this descending channel. And if it were to break the parity level and come back and retest that, I think I'd have to consider being a bear for a little bit. But I probably would be a bear if we broke the trend line as well. If we broke the trend line and got back underneath it, I think we'd probably have another crack at parity. So I'm not dismissing that in any way, shape or form. But if I get the opportunity on an intraday chart to trade to that level, then that's exactly what I'll be looking to do. So, and again, I'm on a monthly chart, don't forget. So I've got 4 or 5, maybe even 600 pips available to get back to that level. But that's exactly what's in my mind at this point in time on Aussie Kiwi. Dollar yen, wow, what a move last week. Ash and I were talking about this in the other YouTube show, if you like. that we do Monday through Thursday. And Ash was saying, wow, look at this candle. You just got to keep getting long. I'm on a monthly chart. We were talking about it on a far lesser time frame than the monthly, and just kept watching it go up and up and up and up and up. This happened whilst I slept, unfortunately, a nice break and retest, even if, you know, I've got a strategy that would allow you to trade that bar there, and a strategy that would allow you to trade that bar there as well. Missed both of them, wrong time of day, I guess. Could have picked this one up on Thursday morning, but didn't. I think there was a reason for that, maybe trading into the week monthly pivot. I'm not sure. That looks to be a good reason not to, but there probably would have been profit available for you to take that trade. But there were two opportunities to trade that from my point of view. Where now? Well, I think we can't really get into a long here at the present moment, but I'm not really thinking long anyway, because we're now back to the top of that range. So big trend line. It is a trend line on a weekly chart. If it were to break and we would find our way back underneath that, again, I would be looking for dollar yen to respect this channel that it's been in since March of 2017 and come back to the bottom. I think that's the market structure that I have to honor, if you like, on dollar yen. And whilst ever that's there, then I'll be looking to trade it from here to here. I don't, for those of you thinking, okay, it's there now, why don't you trade it? That's not kind of the way I trade. I'll be looking on a smaller time frame to show that that level has been rejected. So how does that work? Well, I'll be looking for resistance to break, basically, whether it be on a smaller time frame or the same time frame. I'll be looking for resistance levels, whether they be pivots, whether they be trend lines, whether they be horizontal levels. I don't care what they are, but if they show me that they're false or the break of them is false, that's when I'll start to trade it, and not before. Generally, that will be a new high that comes back and is retested. It might be a lower high, it could be anything, but I'll need to see that sign before I go short. The one I did get into on Friday, and there was such a strong whisper around oil. The birds were singing oil long on Friday, and I was kind of ambivalent about oil because I've got no idea about the fundamentals behind it, frankly. But the birds were whispering it. Actually, no, they were chirping it. So I was very, very conscious, and I just spoke about this.
Were you following that chat?
Yes, I was.
Oh, good. Good.
Yes, I was. Didn't do me any good on oil. I've never traded oil in my life. And I thought, I'm going to put a little bit of money on this.
Settle down, behave properly. Actually, when you finish, Jeff, I'll talk shortly about oil. I want to talk a little bit about coronavirus at the end of the show. So when you do wrap up, I'll talk a little bit about oil and why it's an attractive trade to me. I like the maths.
Yep.
And I'll talk a little bit about coronavirus. Got a few questions about that, so I'll answer those. We'll spend a little bit of time at the end just tidying up a couple of those things. If you've got any other questions, feel free to put them in the box, and we'll try and get to them if we have time.
So this is, it's along the same theme. It's always the same theme. What I'm looking for is a market structure that tells me that we're at a level that can't be ignored. And the market here has spoken very loudly. I don't think I've ever seen a tweezer top more pronounced than that particular candle pattern there right now on a weekly chart. That's amazing. That's not the reason that I've traded this short. The reason I've traded this short is because of the chatter around oil. I thought that was a reasonable chit chat, and as Paul said, he'll get into that in a minute. But we've also hit this very, very long-term high that just hasn't been able to be breached for what's now 15, let's say 5 years. But even if you go back to 2008, we're talking global financial crisis times there, that's pretty much where we had a shoulder, if you like. It's exactly the same level, and we don't want to go back there apparently. So this reeled and peeled back very, very quickly off that level. And I was watching that on Friday. I was actually looking to trade on Friday. I thought it might have been a good opportunity to get into the market. So I chose the euro, which, as you know, I've been trading short. and the CAD, which has been in all sorts. It's just been going backwards at a rate of knots, pretty much primarily due to oil, I would suggest. And so I thought this was at a turnaround point. I might just get into this short. So there was an opportunity there on a 4-hour chart with one of my favourite plays. Actually, I call this the double cross, and that was my reason to enter there short. And there's now been obviously a nice little break of that support level anyway, and a retest of the trend line. So I think that's in reasonable shape, except I've got absolutely no idea what will happen to oil over the weekend. And I haven't got much breathing space here, I'm afraid, because my stop's now at entry. No risk taken there. We'll see how that happens. If the market gaps up here, there might be an issue, but we'll see. That's pretty much where I'm at, mate. The Aussie, I have switched allegiances on the Aussie, and I think those of you who are in my trading group have been waiting for this, or I've been waiting for this to happen, where we took out these lows. I think that now, pardon me, is an excellent opportunity to find a reversal. How far that reversal goes, well, look at that trend line. That'd be number one. So I'll be looking around about, well, price in time is very hard to predict, but let's say back here somewhere at that level, we're probably I'm getting a bit ambitious, I think there. Let's talk about the breakout level. Let's say 67. Can I see that again? Maybe. But I've switched allegiances on that. The reason really that I've switched allegiances on that is, yes, I like to see the low broken, because what it does is provide liquidity to the market and those who are seeking to get long. But moreover, I think the Aussie was in trouble for the longest time because of things like bushfires and things like unstable economy and all sorts of
Trade wars.
Yeah, China was a big factor in that, because the Australian economy is very, very reliant on its major trade partner, China, of course. And as soon as coronavirus hit, well, there's no mystery as to what was going to happen, to be fair. What I now think is, okay, coronavirus has affected the world's economy and will for some time. So I think we're now back, Aussie dollar is now back on a pretty much a level playing field as far as that's concerned. And I do take note of what Julian was talking about earlier with the commodity currencies. And if there's one thing that Australia does have, it's commodities in spades. So if they do rally, then I absolutely see that the Aussie can do that again. And the US dollar, question mark over that. Again, I defer to those who know far more about the fundamental side of that than I do. And if Julian's bearish on the US dollar, then that can only help this as well. So I've now, I won't say I'm an absolute bull, but I'm definitely looking for an opportunity to come off the bottom here and give us maybe a higher low or something like that, so we can trade it long. And you know, that goes to pretty much any chart. I'd kind of say not inside the hourlies, but 4-hour daily, something like that. I see that I do note on the 4-hourly that there's one sitting there right now. If that looks the same maybe tomorrow morning, I will consider very, very strongly putting a long entry above that bar. Stops are an issue at the moment, so I'll probably have a look at the ATR, and if the ATR suggests that the stop loss should go there, then that's probably where I'll put it. If you want to be a little bit more conservative, then under the 55-cent mark wouldn't be a bad place either. We shall see what tomorrow brings, but they're pretty much the biases that I do carry into the week as we potentially bounce off those big levels that I've been watching, mate. So nothing's changed from last week, exactly the same.
Cheers, mate. Thank you very much for that. I hope you have another good trading week ahead. I'm going to see if I can grab the screen. That one. Look, I think I'll just check. I don't think Angie's joined us today. Doesn't look like she has. I'm going to talk about a couple of things today. I want to talk a little bit about oil. It's been good fun. Oil. Oil and gold were two things I never used to trade, but I've got into oil a little bit. I want to talk a little bit about it. So as you guys can see, I bought oil around 22.50, just above that, I think. And the reason that I bought it is reasonably simple for me. And I want to be really careful with this kind of trade, right? But I told the team last week that I thought oil was one of the best trades I'd ever seen. And the reason is because at 22 bucks, 23 bucks, I just don't know how much downside it's got. So they're saying that the marginal cost for oil in Saudi Arabia is around 12, 13 bucks a barrel, but I can't see why they want to get there. And their financial budget for the year sort of budgets on about 60 bucks a barrel. So I don't think they want to get there. So, we think the marginal cost for oil in most places is $48 a barrel. There's a few, it's an overall average we're given. I don't know how exact accurate it is, but I think that the cost of producing oil is certainly going to be more than 20 bucks a barrel for most countries. So to see the price of oil down at $20 a barrel would mean that maybe only Saudi Arabia would still produce. And if everyone else started to stop producing, the price of oil would go back up. So I think we're close to a mathematical low here. And given that the price of oil will never go to zero, I think we're in an interesting spot. I mean, if you could buy oil at 22 bucks on a $5 stop, you've got, at 1 to 1 would be 27, another one would be 32, another one would be 37, 42. You've got 5 to 1 back to $48. Now, if you were wrong and you got taken out at 18 bucks, you could buy it again with a stop of 13. You've got 6 to 1 to $48. And if you were wrong and got taken out at 13 bucks, you could buy it again with a stop loss of 3. And wow, you've got about 20 to 1 to $48. Now, this may not be a short-term play. I don't think that necessarily oil is going to be a short-term play back to, I think what's accepted as overall, we certainly believe there's a sort of marginal cost on it. But I think an oil price between $40 and $50 in the next 12 months is really likely. And I think, 5 to 1's okay on that. I think probably, would hope a bit more. I think personally that oil might gap down on Monday. The coronavirus has done a bit of damage in America, and that might freak out people with oil. We might see a bit of a pullback. Ainsley's our oil expert, and she'll talk about the deal between the Russians and Saudi Arabia. Is it Mohammed Sultan bin someone or other? I don't know too much about that kind of stuff. I just tend to watch the charts. I'm aware of it. We hear the talk. But for me, the maths on this trade is really good. I see from where we are, I think it's really hard to see oil at 13 bucks. And at 13 bucks, I'd have it, even now, if I put that as a stop, I'd have a $10 stop. And I think I could see it at 33, 43, 48. It's 2.5 to 1 on a $10 stop. And I find that pretty hard to move. But I'd call it, almost for mine, I'd call it a concerningly good trade to the upside. Now, if you're an ATW client, you should be trading this with you can wait for the first high or low. You'd be pretty careful on your risk on this. I don't want to see guys barreling into this in big size because I do think there's definitely the potential to lose on the way down. But I think even as you go down, what happens is, if you said that oil can't get below $10, you can afford to get stopped having a crack at it a couple of times, and on the way back up, you're going to make a mincing on it. So I'm waiting. One of the great things for mine, when you start talking about gold, Julian picked this. He made $100 off it. I can't remember exactly the numbers where he sold it and got out of it. But when he takes that trade down through here and makes $100, that's just 10,000 pips. And real, we call it 1,000 in his trade call group, but it's 10,000 pips really, 10,000 cents if you like. When he tells me that gold's going to rally, I get pretty excited. Now, one of the things I know when you have real experts like Julian, that I've learned over the years, is that when Julian tells me that gold's going to go down, which he did around here, it doesn't mean that it's going to go down tomorrow. It means that it's going to go down in time. And when he starts talking about a buy in gold, there'll be a buy in gold, and it will be a big trade. But I think we're still a little while away from it. We still need to see that inflationary pressure start coming into the market. And while the likes of Julian, who runs a big, he trades other stuff, he trades a lot of money. He can look to front run this stuff. Retail traders should look to follow him along. We had a question about coronavirus, and this is what I'd like to say to people who are asking about it. The truth is that it's, I'm going to call it in my view, maybe it's not the truth. My truth is that it's out of control right now. And that the spread, particularly in the US, is really concerning in the short term. The US are the world's best consumers. You know the old saying, you give an American $100, he'll borrow 10 and spend 110. You give a Singaporean $100, he'll save 90. And Americans are great at spending money, and they make economies go around because I don't mean just Singapore, lots of cultures will save money. But as America succumbs to coronavirus, as coronavirus is in America, massive money from the American government. As it arrives in Australia, massive money from the Australian government. As it arrives in the UK, massive money from the UK government. It arrives in New Zealand, massive money from the New Zealand government to try and sustain the economies. Now, they won't be successful, but they'll go towards being successful. The real concern for me is what happens in countries that don't really have a lot of money. We don't trade some of the currencies, and I'm not going to go looking for them, but I would have thought there were one or two African currencies at the moment. The Indian, I'm not sure they've got the resources to fight this. And so I don't think we're going to see, but for mine, I'm expecting a gap down on Monday morning on oil, potentially gap up on gold, because I think that the US numbers will freak a lot of people out. But they're at least to some degree padded by the financial measures in place by those governments to hold them. What's going to happen in Africa, some other parts, Indonesia, Malaysia, they're not big countries, but they've got a lot of people, and we'll be interested to see what happens to their currency. South Africa, that would be one. I don't trade dollar ZAR, but I'll be a bit more interested in seeing, if I was trading them, I'd be a bit more interested in those kind of currencies and the majors at the moment. I think the big countries are putting so much money into fighting the economic damage that it's padding the effect on the currencies, which is why I think we're not seeing massive moves in them so much. I think they moved down in the Aussie is perhaps a little bit different for different reasons. So I think with coronavirus, I think, put it this way, I don't think the stock markets have found the bottom. A lot of the team think maybe one more leg down. I think they might have a fair chunk to go yet. I said earlier, I'm a big buyer of Air New Zealand. I'll be looking to buy Air New Zealand at some stage, but it won't be this week or next week. We'll if you don't believe that the stimulus packages are the equivalent of what they're replacing, then you should expect to see economies slow and markets continue to fall. And for me, I do think that things like stock markets have got a way to go yet. And plenty of experts around saying they're on the bottom. So I'm not saying that they are. I'm just giving you my opinion on it. I think they've got a little while to go yet, but I think the currencies might stabilise a little bit over the next couple of weeks. On the big currencies, some of the African currencies, some of the high population currencies might be a little bit different. And I think the really big question facing the world at the moment really is, I think 47 new cases in China yesterday, and if that got to 100 in a day, that would be a lot more concerning. All of a sudden, things would be a little bit different to the way we perceive them at the moment. And a lot of what's happened with coronavirus has been, I think if you're watching the numbers, you watch it, none of it's, it's not really surprised by some of it. If you're watching, none of us like it. We hate it, but I think the numbers are surprised. And if we got some infection back into China, I think that would make a huge difference, and we might see some real volatility back for a little while. Otherwise, I expect it to calm down a little bit and not be as big. Hope I've answered the questions that we had on the coronavirus with that. With the oil trade, again, if you're trading one of my accounts, one of the Access to Wealth educational accounts, I'm going to ask you guys to trade that in proper ways at 1% risk with a big stop loss. I'm talking about a $5 stop loss on oil. You could go to 10 if you really wanted to have a crack, and just drop your volume down and build that position. I don't expect oil to be at $45 to $50 in the next week or month. I expect oil to be at $45 to $50 by the end of the year. And it may be there in a day. It might be a deal done in OPEC. It might get back to 30, 35 pretty quickly. but I'm quite happy just to hold on to the long. I don't think there's a huge amount of space to the downside. So I think it's a good trade. Gentlemen, anything from any of you before I wind it up?
Not from me, mate. I think your logic on oil is very good. I like that. That's very nice. My 50-cent stop loss wasn't real good on Friday.
I wouldn't trade anything on a 50-cent stop loss right now, buddy, to be honest. Ash, anything from you before we wind her up? Guys, just a reminder for you that are joining the different shows. So this is the last week of the Monday to Thursday UK Open show at 4 o'clock in the afternoon in Singapore. It's the last week before UK Daylight Savings turns up, and that'll push it back to, I think, 3 o'clock. And for those on this show, I think we'll do potentially one more show at this time next week. I think the week after we'll be able to go an hour later in Singapore as Daylight Savings in New Zealand. Will put us an hour closer to you guys. So we'll be able to do 5:30 Singapore, 9:30 New Zealand. We do the show at 9:30 New Zealand so that Julian can share early and get some sleep. He's got a full-time job to go to tomorrow. And as a trader, it's a bit different from the rest of us who trade our own hours, if you like, outside of that. I guess all I've got left for you guys is take care. Trading's trading, and it's all good fun, and markets are great fun to have a look at. And there's some great opportunities around Northern, and I think a very good opportunity right now. But none of us is as important as taking care at the moment. These idiots went to the beach in Australia the other day. They're idiots. And if you're listening, don't do that stuff, guys. And for you guys, I just ask you, please take care, look after yourselves, sanitize your hands, stay away from strangers, do the sensible things. And if we all do that, then not too far away, we'll be back to our normal standard of life. And if we all don't do that, we might be in for some pretty rough times. So I really encourage you guys to genuinely take care of yourselves and each other. And we'll see you guys next week to talk more trading. Thanks for your time.
Hear, hear.